Welcome to TradeTheMBI.com. This is John. This reports for the 17th. Keeps on going. Yeah, nothing bad in the world at all, other than the fact that you have a ridiculous price for oil, that some countries are running out of supplies. And from a market viewpoint, yeah, that all fits within what already is known. So, again, this gets back to that whole if the sky is falling, you might as well buy stocks because if the sky doesn't fall, then you got in when everyone else panicked. And that's pretty much the logic we were talking about down here. Um, and it played out. And that's been a huge run. And, at this level, it gets a little bit harder because you don't have the short action to drive things forward. So what you need to do is create another negative narrative that scares some people, get a retrace back into it, and then you have more fuel to do it again. And that's generally how that works. And that's really what we see in the moves up and down is that kind of process where you convince people that things have gone too far or valuation this that and the other is too rich. A lot of people don't really understand or have never respected the idea that the market doesn't accept devaluation of currency value. And so even in a negative economic time, you can still get a market increase just because of inflation, um, because it's always going to counter that. And that's just the way it is. Well, taking a little bit more of a dip now, we're into the upper 80s. It's still massively damaging to growth. Globally, that's going to be a massive hit. I'm sure the IMF will come out with all sorts of numbers, probably less so to the U.S. economy, but Trump was looking at a situation where you had a really strong uh, growth trajectory to where he muted it quite a bit with this. Does it turn around in time for the midterm? We're getting to the point now where we've almost passed the window to where you're not going to get hit with that inflationary bubble right at the time of the election, and yeah, it's a problem. So, did the timing go off the rails a little bit for him, or was there already a projection about it? We don't know what the intelligence was that forced the hand if they were that close or what to destabilization. What we do see though is they are moving towards capitulation. That the economic squeeze it matters, but it's got to be significant enough to where they feel like they can't pay the bribes or whatever they need to keep the regime afloat. And that really becomes the question because you would have to have some pretty dedicated fanatics who don't want money to continue. That's how all of them collapse at a certain point. The calculus is not beneficial. And if they think that if being a leader is going to cause them to get blown up by a drone, yeah, they might rethink themselves. So very exciting for the euro because again, like we talked about, they're on war footing, and so that means massive spending, and that is also this belief that the U.S. is as a dollar is collapsed and unsustainable, and they may not be wrong because again, the spending is staggering. Um, will these oil prices really create a boon? Do we get anything for it? Do you start charging a toll to pay for what you just did, in the Gulf? Can't see it happening, but the point being is that you've spent this money, you've created this destruction, and the interesting thing is that the amount of money, whether they're talking 60, 70 billion for some of those Arab states, they're going to have to spend just to fix what's already been destroyed and from desalinization plants. That's a real uh, investment in one hand from a GDP standpoint. So that is going to create jobs, blah, 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 blah. But also it's a shift. So you're taking really non working capital as far as profits of that and then actually forcing them to go back into actual production needs, which if you're thinking from an economist standpoint, as I tend to think about things like that, it's not a bad thing. The reconstruction after a war is always, the kind of productive investment in capital that you want versus buying more weapons. Does nothing. It's very limited. I mean, they'll all talk about the jobs that it creates, but it's not that much. It really is wrong approach. We're still seeing Bitcoin in that move. So the suggestion is that maybe the arenas are still charging fees or whatever. And that's happening in there. Of course, we've had this basing, and we saw the improvement coming in through the DOC readings here. The first buy, well, right back there when you had the orange dip below the green at that particular space, and then we've started to ebb above. That was right where we closed above the 23%, which is kind of a classic area that we look at. In this particular case, the white leading was one of the things that held off on the algorithm. I still go back and forth on that one and still running the numbers on. Is it better to get in a little bit earlier from a risk reward standpoint so that you have a better stop profile or not? And that's some of the numbers that I keep running on that one. So once I finalize it, then it'll be a decision, and I'll move the paint to adjust exactly to what the best numeric value is. From a 50K, it required nothing. I mean, you almost had a DOC spread, but it didn't quite. And that allowed for a DOC reset. So went from this extreme on the red DOC and the white to giving yourself an opportunity to reset. We didn't even come to the zero. We're right now actually at the 0 point, which is fantastic given the fact that you're making new highs. So yeah, all that's congruent, all that looks good from an intraday view. 5K tick, a lot more volatility movement within it. And I think that's healthy because that gives you a much broader range. It shows you that the option players are getting their activity both directions, and that allows them to even the book, and that also allows things to continue to move in a direction. So while it looks smooth from a daily picture, the range has narrowed quite a bit. It's much harder for bulls to push things. We're in the middle of the month, so there's not a whole lot of new money, though a lot of the money was on the sidelines. So that it's coming back in, that has created a little bit of a cycle of, okay, I don't want to miss out because now am I too late? But then, of course, that's where the wall of fear comes because it's like, well, but am I buying it too high? Buying at the highs? Is that so smart? And I don't think we're at the highs because inflation math says we're not. So that's long and the short of it for now. Anything relevant, I will put it on the team chat. Have a go. Trade well.